Welcome back to the Cobra Trading Channel, everyone, where we focus on people, passion, and platforms. I'm Alex Bustos, and you know what's really frustrating about trading? Losing. Well, let's talk about how to deal with that. First off, I want you to look at trading as a business, because in every business that is created, there's business expenses. If you're starting a restaurant and you need to buy supplies, food, hire staff, all of that is money out. It's not money in. And you'll start making money until some time goes on and you get customers. Well, in trading, you don't have that problem where you have a lot of expenses. However, you can start trading right away and start making profits or start making losses. So understand that losses are expenses, and you want to have that mindset of this is a business. Expenses are part of a business, and it's going to happen throughout my entire trading career. And with this mindset, it'll allow you to be okay with losses rather than fighting every loss and being upset, because we don't want you to get emotionally tilt and blow your account up. The first thing we need to highlight is good losses versus bad losses. Make it very clear and simple. Good losses are any loss that you take that are part of your plan and are written down on your piece of paper before you place a trade or in your trading journal. You need your entry, your exit, while you're entering, the entire scope of the trade, you have it laid out and you followed it. A bad trade is holding on to a loser even when it breaches your plan. It's when you enter a trade and you don't have a plan at all. That is a bad trade, and you want to make sure you don't take these. However, you need to distinguish what's a bad loss and what's a good loss, because good losses are going to happen and that's what you want. Even if you're consistently losing because you're new, if they're good losses, you can learn from them. When it's bad losses, you're just undisciplined and you're not sticking to a process. Now, I want you to get into the process of learning from your losses. So when you take a loss, the first thing you want to ask, was it a good or bad loss? Great. If it was a good loss, what's next? The next thing you want to ask yourself is, what could I have done different to improve that trade? And there's different questions that you're going to ask. Was the setup an actual setup? If it was there anything I could have noticed before I placed a trade that would have triggered me to maybe not place a trade? Remember, you're learning, so just because you see a setup and you think it's an A setup doesn't necessarily mean it is. It might be an A setup in your perspective, but you 5 years from now may see that as a B setup. So just understand, while you're growing, you need to evaluate every good loss, because it can help you refine your strategy and make it an A+ setup. So that way you don't take as many unnecessary losses and you take nothing but good losses. Now, a quick tip I want to give you. If I ask you the question, if you take a loss and after the fact the stock goes in your direction, does that mean it was a bad loss or a good loss? If you're the individual who says, well, I took the loss and then it went in my direction, that's a bad loss, like I shouldn't have taken that loss, then you're incorrect, because a good loss means you stuck to the plan. Remember, we talked about that at the beginning. You want to stick to a plan. Those are good losses. If you're going to judge yourself on what happens after the fact, you are going to be miserable. You're going to be upset all the time. And you're not viewing this as a business where losses or expenses are going to happen, and you need to make sure that you follow a process, just like any business follows a process to be successful. So I wanted to throw that question at you really quickly to make sure you're paying attention. Now, we talked about taking good losses, what you should do to evaluate them. You need to look at each trade that was a good loss. Ask yourself, where could I have entered later? Maybe entered sooner. Maybe I could have had a better stop somewhere, because you start to evaluate the trade and notice, hey, it was a bull flag setup. I was going long. And then all of a sudden you notice after the fact, after you took the good loss, that VWAP could have helped you tighten up your stop. You can start to refine your strategy. Now, what happens when you take bad losses? You just throw them out the window and say they're bad losses, like I shouldn't have done it? No. You can still learn from them. You can start evaluating those bad losses and asking yourself, why did I take that trade? Was it a setup? What was making me want to trade it? Was I anticipating? Was I emotional? Was there FOMO? And start to write those down in your journal, because it will help you evaluate yourself and help you understand where your weaknesses are and how you can improve on them so you can eliminate bad losses. Now, once you start taking losses, you're going to start to feel that little uncomfortable feeling in your stomach of, I want to make it all back now. If you feel that way, take a step back, turn off your computer, go breathe, go for a walk, Go play with your dog. Go read a book. Whatever gets you in the now moment so you're not just constantly thinking about that past loss. You need to get centered and you need to get relaxed, because if you trade with that energy, you will create more losses. It's just gonna happen. And if you're thinking to yourself, well, Alex, I've been trading for some time and I've actually made back my losses when I'm upset and I've put down more money and I made it back and some. Great, I'm happy for you. But just know, any experienced trader knows that that's the door to disaster, because in trading, the market is a funny teacher where it doesn't really discipline you right away all the time, whereas it lets you make that mistake and think you're right until you start to do it with bigger size. And then when you're wrong, you're really wrong. And then you might fall into a hole that you can't dig out of. So you need to understand, I know maybe it worked for you in the past, but trust me, you wanna take a break and you wanna get clear. Come back to the market when you're comfortable, relaxed, and ready to focus on process. Now, when you come back to the market after taking multiple losses and taking that break, you're gonna wanna ease back in. You're not just gonna come back at the market with the same size that you were trading prior, and definitely not come back with bigger size, right? Because we talked about that. You wanna come back with maybe half that normal size so you can ease yourself back in and get that momentum going. Because trading has a lot to do with confidence. And if you're not feeling very confident, and you come in the same way that you're normally trading with the same size, it can make you less confident if you don't hit a good trade right away. So you wanna size in slowly and ease your way back in to get some consistency back under your belt. It could take 2 trades, it could take 3, it could take 1, but just do it slowly. Don't rush. And the key is, don't rush. Because if you rush, what tends to happen is you go further back the other way. Now you have a better understanding of why it's important to view trading as a business and understand that losses are expenses. So we wish you the best of luck on your journey. And if you have any questions, go to cobratrading.com, click the live chat feature. We're always there and happy to help.